This is Alan Bush with the Daily Financial Forecast for Thursday, June 13th. Stock index futures closing mixed on Wednesday after the Federal Open Market Committee left its Fed funds rate on hold as expected, keeping the rate at 5.25% to 5.5%. FOMC members' expectations averaged a single interest rate cut of 25 basis points this year, which is fewer than the 2 rate cuts that markets were anticipating. Also, futures today advancing with the bullish May Producer Price Index report, the PPI coming in down 0.2%. That compares to the estimate of a 0.1% increase. Also surprising were jobless claims coming in at 247,000 when 222,000 were anticipated. So this is quite a bit off of what was predicted, which is generally not the case to be this far off the estimate. Longer term, the fundamentals for stock index futures still appear to be supportive. Moving over to the currencies, the dollar index was higher in the overnight trade, but quickly giving back a lot of the gains when the bearish producer price index report was released, coming in with that decline. We had German wholesale prices falling 0.7% in May compared to the same month last year. Still not really seeing any advantages either way in currencies, as interest rate differentials seem to be offsetting for the currency markets. However, there are better opportunities in the interest rate futures markets. Still looks like the Fed will be cutting rates at least one time this year. Other central banks have already cut rates and will probably continue to cut interest rates. Right now, there is a 70% probability that the Fed will be cutting at the September 18th meeting. So it's the long end of the curve futures that appear to have the most bullish fundamentals. That would be the 30-year Treasury bond futures. But I think futures across the curve are probably going to head higher. So good trading, everyone. Once again, remember, these are my opinions alone and are not the opinions of ADMIS or ADM.